When you deposit your money at a bank, generally it does one of two things with your money: either loan it out or buy treasuries. US banks actually hold $4 trillion worth of treasuries. But here's what banks won't tell you: you can earn a better return and maximize your interest on your cash savings by owning treasuries yourself. So let's dive into what you need to know and how to apply it. And make sure to stick around to the end of this video, where I'll show you 3 real examples you can use to start maximizing your interest. So what is a treasury bill? It's just a short-term loan to the US federal government. You might wonder, how much interest does it pay? Well, as of November 2024, they pay 4.75% on an annual basis. That rate is determined by the Federal Reserve. It's called the Fed funds rate, and it can go up or down over time depending on the economy. Now, as a contrast, banks often play games with teaser rates with high yield savings accounts. The Fed does not do that. You will notice that the Fed funds rate changes slowly over time, whether it's going up or down. I want to tell you about some tax benefits available with Treasury bills. There is no state income tax due on Treasury bill interest. Let me say that again. Any interest you earn from Treasury bills is not taxable at the state level. So even if a savings account pays 4.75 and a treasury bill pays the same thing, the treasury bill comes out ahead for that reason alone. Now you might wonder, how safe are treasury bills? Well, they're backed by the full faith and credit of the US government, just like FDIC insurance with your local bank. And actually, Warren Buffett's company, Berkshire Hathaway, owns $288 billion worth of treasury bills. And at the 2024 annual meeting, he called treasury bills one of the safest investments there is. Now, a question that clients often ask me is, if I buy these, am I locked in? The answer is no. If you hold them at any major brokerage firm, you can sell them anytime. There's no penalties. There's no commissions. Okay, let's talk about 3 real examples that you can use to help maximize your interest. The first is ticker symbol SGOV. This is a basket of treasury bills maturing between 0 and 3 months that you can own at any major brokerage firm. And because it's so short term, it's considered a cash equivalent, which is why it can potentially replace a savings account. It'll accrue interest every single day, and then it'll pay out interest every month. The fee for owning it on an ongoing basis is less than 0.1% per year. The second option is owning individual treasury bills, which again you can do at any brokerage account or even an IRA. There's 0 fee for doing this. No fee for buying, no fee for holding, no fee for selling. The third option is with Treasury Direct. This is where you can buy treasury bills directly from the US government on their website, which is treasurydirect.gov. The only downside to this option is there's no way to sell early. And these aren't just examples that I've Googled. Of the $160 million that my firm manages, we've invested over $15 million in ESCA. So I am eating my own cooking here. Now you might wonder, are there reasons to use a high yield savings account over treasury bills? The answer is yes. And the reason primarily, in my opinion, comes down to price fluctuation. So with a savings account, you're never going to see any price fluctuation. With treasury bills, as I've said before, they're very safe assets to own because we fully expect the US government to repay all principal interest on time, but it's a brokerage firm's responsibility to show you on any given day how much you could sell your treasury bill to another investor if you wanted to do that before maturity. So because of that dynamic and because interest rates change daily, you'll see some small price fluctuation. Usually it's less than 0.1% per day, but it does exist. If you're the kind of investor that doesn't want to see any price fluctuation at all, high yield savings account hold an advantage there. If you're willing to see small fluctuation for the benefit of potentially higher yield and the tax benefit we talked about, treasury bills are probably a better fit. Okay, I hope you found this video helpful. If you did, please share it with someone. Lastly, I'm Jonathan Bird, founder of Farnam Financial. We help clients either in retirement or nearing it. We help them turn their financial house into their financial castle. To me, a castle just represents things like security, longevity, and peace of mind. So the portfolio and planning recommendations we offer are all designed to offer those 3 things in your financial life. If you're curious about how we can help you, please visit us at farnamfinancial.com. And lastly, if you're curious to learn the easiest and fastest way to minimize your lifetime tax bill, please click here to check out my video on asset location. It's a no-brainer if you own a brokerage account or a Roth IRA. Thanks.